Let's jump straight into the Fear and Greed Index. Welcome back. This is your mining market signal, and today the Fear and Greed Index indicates that we are at a rate of 25. That's still extreme fear, but we've gone through a couple of interesting developments over the last several days. As the price of Bitcoin has gone way up, so has the Fear and Greed Index, indicating that people are leaning more towards greed than fear. That's normally a good sign, normally a very, very good sign that people are interested in putting more money into the market. Again, not legal, financial, or other advice. Do your own research. Make sure you don't get wrecked, guys. All right, so looking over at the CoinGecko ratings for the entire crypto market cap, we see Bitcoin at the very top of the stack at 35.4. However, over the last several days, there's been a bit of price movement, and we'll take a look at that when we look at our portfolios, but you can see it right here over the last 7 days, 5% down. We can kind of see the trend line as well, getting up towards $40,000 and then coming back down. So there you go, a little head and shoulders action right there. Don't pretend to be some kind of technical analyst, but you can see it right there in the shape of the graph in terms of the price action for Bitcoin. Things have been going very interestingly for Bitcoin. A little less so, a little bit of decorrelation for Ethereum, though you see it's very similar shape right there. But yeah, the market is kind of doing funny things right now. Polkadot, Uniswap, all the others that we see as second layer solutions or as smart contract solutions also kind of doing funny things. We'll take a look at that in just a minute. And Polygon, kicking butt, taking names, or formerly known as Matic, still with the ticker symbol Matic, doing phenomenally over the last 7 days. One of the exceptions. Why is that? Well, we're going to talk about that as we look closer into our portfolios, but I'm just going to give you a spoiler right now that Matic is doing what Ethereum can't yet. It's scaling Ethereum transactions with very simple bridging technologies so that any asset you have on Ethereum will bridge into the Polygon or the Matic network, so you can start doing smart contracts, NFTs, whatever it is you're going to do with Ethereum, you can do on Polygon, generally speaking, and you can do so with lower fees, with faster throughput. So Polygon is experiencing quite a pump right now, and that's not because of a marketing push on their part, it's because of increased functionality on their part that's shipping right now, that works right now. I, for one, am accepting payouts from Ethermine on Polygon or on the Matic network. Son of a Tech did a great video detailing how you can do that, so I won't duplicate the effort there. I'll just link you to his video down below. I didn't use his to get started. It's really not that hard. There's a blog post as well that I used if you want to just read through it and use that. But Son of a Tech did a great job covering it, and it's a huge benefit. It's a net credit to those who are interested in GPU mining for as long as Ethereum is GPU mineable. I think it's worth it, and I think that having native wrapped Ethereum payouts on Matic allows us to either peg to USDC or whatever stablecoin we want to peg to immediately, or get into DeFi projects much faster. There's just decreased friction, right? Lower costs, faster speed. So I think that's why. No big secret on the Matic network. Let me jump out of the way here and let's take a look at our what to mine numbers before we get into our actual portfolio. Start from the very bottom of the stack. We've been using Team Red and the 380. These are aging cards, guys. These should not really be in production. Nobody is saying that these cards should really be in production these days, but they may still be out there somewhere. Our cost basis is 12 cents, and we're using 7-day averages, both for profitability and for the difficulty for revenue. Though, now with the addition of Matic payouts, it might be worth looking at lower time frames, 1 day or 3 day. You let me know down in the comments section what time frame you want to see. I think for today's video, I'm going to take a look at the 3-day, and we'll go just a little bit still on the conservative side, because with even a small rig, you can get daily payouts on Ethermine right now over the Matic network, the Polygon network. So I think it's worth considering that. You may want to take daily profits by pegging to a stablecoin or by just cashing out, sending it over to some other system where you can cash out, and those fees will be much lower, consolidating those mining profits on the Polygon network than on Ethereum. So that makes it possible again. So our logic for moving the way that we did, or evaluating the portfolio and the mining profitability the way we did before, is kind of broken now, right? That logic doesn't work anymore in a world where fees are cheap, and transfers are fast. So let's move with that in mind. So going to 3 days on average for both of these. Let's see what we get still with the cost basis of 12 cents per kilowatt hour. I think that's going to be a wise way to move forward. Ethereum Classic still making money. It's over 25 cents per GPU per day. 36 cents there, with Ergo in a close second at 32 cents per day in profit. And hey, look, Conceal actually still quite profitable, over or almost 1/4 per GPU per day on the older 380s. This is several architecture revisions old, right? Several die processes and die shrinks old. These are old cards. So if you still have them around, it's amazing that they're still in the money, even on not particularly cheap power. Going over to the Fury, this is an HBM card with really fast memory. Let's check to see what our profitability is there. Again, we need over 5 BTC per day in volume, trading volume, to be able to get these coins out of our possession and into the market if you wanted to just get out, right? Divest of your profits every day. And it looks like Raven Coin is doing awesome, almost 85 cents per day, every single day on the older Fury HBM card, an under 4 gig card. Let's take a look at our AMD 570. We're just going to take for granted that this is a Polaris edition card with 4 gigs of RAM. So it's not able to mine Ethereum any longer. And checking the profitability there, also Raven Coin at about 85 cents a day. That's crazy that the Polaris card and the old Fury card are nearly as profitable on Raven Coin at the same power rate. So take that in mind, or keep that in mind, if you are looking right now at acquiring old cards to mine with for the end of this bull run. Maybe the most responsible way to do that is to keep your costs low and go with older equipment. I don't know. I've been a big fan of that for a long time, going with tech that is a generation or two old. So you kind of hit a sweet spot between price and performance. And I think with mining, especially in markets like this where prices have been up, they've been elevated for so long, it still makes sense to look at something that is more cost effective instead of just bleeding edge and paying for bleeding edge and then waiting to ROI or waiting to return on your investment for so long because you bought bleeding edge. I was critical of this back in 2017, 2018. I was very vocal about it. I got pushback from the community about it. You tell me in the comments section, what do you think? Does it make sense to go with older hardware where you know you're going to return your investment sooner and it's still kind of in the money? Or do you think it's worth still hanging on to those GPUs just if you have them? Tell me down in the comment section, guys. This is not me endorsing you buying anything at all. On the contrary, it's me just saying that if you were going to buy something, it makes sense to get the best possible price on it. And one of the ways you can do that is to avoid getting scalped by these new RTX model resellers or even the big box stores like Best Buy and Micro Center. They're marking their prices up far beyond what MSRP launched at, and nobody's stopping them. We're just like idiots. We're all just going and buying more. So I think used hardware is kind of where it's at, personally. But going back into the lineup here, that's the 570. Let's take a look at the 580 8 gig card. So we know we've got some prospects from actually mining Ethereum. Oh, here's a simple hack, guys. Also, I don't really want to see this advertisement here. I'm going to right click, block element, create, gone. What is this? Ooh, custom profiles. That's interesting. We can sign into what to mine to get a custom profile for a new GPU there. We might do that in the near future, guys, where we can just go ahead and assign those values ourselves. You tell me, again, down in the comment section, do you want me to put in the effort here to create a custom profile for GPUs so we know we get the best possible performance figures on each GPU, and we can add models that aren't already present here on this lineup? I'll do that if you want me to. Just sound off in the comment section and say, yeah, Seth, go ahead and put those custom GPU profiles into what to mine. If I get that plus, let's say, 350 upvotes on this video, I'll do it. Deal? All right, guys. Let me know. Okay, down in the results here, we see Ethereum is top of the stack. It's only at about $1.39 per day per card at 12-cent power. Not its best performance so far this market, but it's still in the money, and these are old cards, so that's pretty impressive. Vega 56, bottom of the line for the Vega HBM2 architecture. And we've got Autolycos outperforming Ethereum by a significant margin, almost 50 cents per day, more than 50 cents per day on Autolycos or the Ergo coin over Ethereum. I really wasn't expecting that, but there you have it. That's on Vega 56. Top of the line would be Radeon 7 for HBM2 Vega architecture cards. And we've got Ethereum back at the top of the stack there. Very interesting that there's something about the architectural difference between the Vega 56/64/Frontier Edition and the Radeon 7. But it's enough of a difference and performance boost that Ethereum is back at the top of the stack, almost $5 a day. They're $482 on the Radeon 7 with that not so great price for power. 5,000 and 6,000 series cards, bottom of the line, and I apologize, we don't have custom profiles for this. I wish we did. I wish we had a 5500 XT or something, something just a little bit more efficient there. We've got Conceal at the top of the stack between those two cards, and it's going to be erring in favor of the higher performance card on the 6,000 series because it's the 6700 XT, and Conceal very top of the stack, $485 between those two cards, somewhere over $2 or almost $3 for the higher performance model there. Going with 5700 XT and 6800 XT. Let's check to see what our profitability is. And again, guys, just a reminder, this is 3 days, not 7. Just keep that in mind. But we've got Conceal top of the stack there as well, $751. Clearly, Crypto Note or Crypto Night GPU version, right? It's kind of a, which I believe is a bit of a variant of the Crypto Night Heavy. No, actually, it's not. Crypto Night GPU was another iteration, so it's not directly related to Crypto Night Heavy. But the point is, it's a Crypto Night variant, so tends to do really well with Team Red. I'd be very surprised if we saw Conceal at the top of the stack for Team Green anywhere in the lineup, but we'll see when we get there. And it looks like it's doing very well also. 6800 XT is going to be where the majority of that hash rate lives. Go with the value and efficiency play on Team Green. So 1600 or 1060, 1660, 2060, and 3060. Hit calculate, and again, the majority of the hash rate here is going to go to that 3060, that RTX model card, and Ethereum top of the stack. But surprise, surprise, Conceal is there also, a very close second. And gonna have to eat crow, guys. I thought that it was going to do better on the AMD GPUs and not so much on the NVIDIA GPUs, but here it is. Conceal is a really good option on both. So for your high efficiency mixed rigs, maybe Conceal is one way to go. Maybe that is your best option for some higher efficiency, low end mixed rigs where you got Team Red and Team Green in the same rig and you're trying to figure out what exactly to do with them. Could be that Conceal is your best play there. Plus you got plenty of trading volume, over 10 BTC every single day with Conceal. So they're doing something right. Looks like we have got We've got a little bit of an issue there, a little warning on What to Mine. If you're watching this same day, What to Mine is showing us that there was a very heavy spike in terms of the difficulty. So just take this with a grain of salt, guys. What to Mine is not perfect. It tends to be one of the more accurate outlets, but it's not perfect. None of them are. So all of this you got to take with a grain of salt. Get rid of that lineup right there. Go to the very top of the line, 3090, 2080 Ti, 1660S, and then 1080 Ti. Calculate, figure out what's what here. I can't believe what I'm seeing, guys. I can't believe this, right? So here's Conceal again at the top of the stack. And now I'm starting to think there is something off between the pools and the RPCs that What to Mine is pulling directly from the Conceal network. There could be some kind of an issue that we're experiencing right now as I create this video that is preventing us from getting the full truth, right? The full picture here. But if this is legit, then hey, congrats Conceal team. You're at the top of the stack for the highest performance Team Green cards today and some of the highest performance Team Red cards today. So mixed rig people, rejoice. If you're into Conceal, then today is your day. Pegging out to some profits somewhere else. I mean, this is not advice or whatever, but these kinds of profits don't always last long. You may want to lock those profits in, and I wouldn't say mine to exchange or whatever, but try to lock those profits in as soon as possible by going to exchange and getting those profits in some other coin that maybe you think can go the distance or has another 10x ahead of it in the middle of this bull run towards the end. So you evaluate that for yourself, right? This is not advice, guys. You can make your own decisions. Big boys and big girls in the audience. So that's what's profitable today, guys. Maybe I shouldn't have been so surprised that Conceal was so high on the list. I'm really glad to see that Ethereum is higher on the list than NiceHash by a significant margin. So it's far more profitable to mine the native asset than it is to go and contribute to a hash rate aggregate aggregator like NiceHash. And let me be clear, I got some pushback in my last video for saying some very impassioned things about NiceHash. And I'm not going to apologize for those, but I do feel like I owe you an explanation. So when I say that NiceHash is a known bad actor in the space, I don't mean to say that there are any kind of criminal charges that have come against NiceHash that we should all be made aware of. And I'm not trying to give anybody a hard time who works at NiceHash. What I'm saying is that bad actors historically have used NiceHash and hash rate aggregators like them in order to purchase hash rate and then nuke other projects like Bitcoin Gold. And this is not a function of opinion. And there's no exonerating these teams by saying, oh, there was some hacker from North Korea that infiltrated their wallets. That's not what I'm saying, guys. I'm not talking about that at all, not one bit. I'm talking about hash rate aggregation and pools to a lesser extent, but hash rate aggregation being a dangerous thing. It's like a giant, 15 megawatt laser that you can go and spend a little bit of Bitcoin for, and then whatever you point that laser at, you burn, you vaporize out of existence. Hash rate aggregators like NiceHash make that possible. I've used them on small networks that were just starting, like day zero coin launches, or the end of a specific algorithm for certain old coins that was about to shift over in their pools, right, in their wallets. And in order to make that change faster, it was faster for me to just set up the hash rate on NiceHash and point it at a pool, at a wallet on exchange, and then make out like a bandit. And I'm not the only one who's done this. So I know it's possible for much, much smaller networks. But here's the thing. With a network like NiceHash, with a tool like NiceHash, it's possible on some projects even slightly larger, along the lines of not Ethereum Classic per se. I don't want to go making any spurious claims here, but almost like Ethereum Classic is what I'm saying. You have that much hash rate available to you at a place like NiceHash that you can be a disruptive, bad faith actor in the space. So I hope that clarifies my stance on it. I'm not saying that the company itself, NiceHash, is categorically evil or that they're like scammers or whatever. Other people have said that, but I'm not saying that here. What I'm saying is that NiceHash as a hash rate aggregator is a tool that has been used by people who want to go and wreck coin networks. So it's far better, in my opinion, to rent directly from independent miners, to just rent their rigs directly on something like miningrogrentals.com, so that you at least know that there's a person operating the mining rig over there. You're not just buying hash rate blindly from NiceHash and wreaking havoc. I hope that's helpful, guys, and clarifying. All right, so we figured out what's profitable to mine. Let's jump over to CoinGecko to take a look at the markets right now and make sense of that in our little portfolio. I won't take much longer, and I appreciate you guys being here. And again, guys, thank you so much for being subscribed. It means a lot. So hit that bell icon if you're not already aware of when new videos come out. It means a lot to me and helps me know that I'm on the right track, making the right kind of media. So here we are in our portfolio. I'm a little bit ring light blind, guys, for my camera. And in our portfolio, we've got our GPU mineable list right here that'll tell us various coins that we can mine on GPUs. And disclaimer, again, I changed this a little bit so that it's more than just the GPU mineable coins, but also some coins that function within the DeFi ecosystem that we might be interested in having, especially as we have faster payouts on Polygon. We can peg to these coins much faster and work within DeFi to either be involved in staking, in trading, in some kind of high liquidity provision, right, for other automated market makers. We can assist in DeFi in a way that makes mining on GPUs, the dollar cost averaging subsidy of mining, can be given a force multiplier by mining directly into DeFi instruments. It's a very powerful thing, and I want to kind of show that here just a little bit. So on our portfolio, we've got Conceal at the very top of the stack. Again, whatever it's done, it's doing very well. It's surpassed even Flux in terms of lifting up the entire portfolio, but our total P&L for the portfolio is still down by 10%. It's been a very rough week since we last spoke about the mining market signal. So we've got concealed, it's just shooting straight up. It looks almost parabolic. It's not quite. It's a really weird, awkward knee of the curve there. It's kind of shot right up. And we just caught the magic moment to be able to show concealed kicking butt today. But they're up by 78%, and I'll check it out. From $1,000 put in, it's at $1,785. That's just amazing, guys. Flux still keeping its head above water, even with the recent blood in the streets from the last week, even going down 12% over the 7-day. It's still above the $1,000 that we put in initially. Polygon, or Matic, also doing very admirably, and I added it to the list precisely because of the option of using the Matic/wrapped ETH liquidity pair. What does that mean? We'll go over it in another video. All I'm going to say is that Matic is more important to you as a GPU miner than you might realize right now. You should do your homework on it. It's very important, and if you don't know what it is or what it does, you need to learn fast. We'll talk about it in another video, guys, coming up soon. But it's there on the list. Ren BTC and Wrapped Bitcoin are also about halfway down the stack, not losing as much as everything else, but we're still ranging sideways, guys. We have been for a while. We're in a very strange sideways channel here. Going to the very bottom of the list, our biggest loser is still BitTube, sadly, at 36%. It's up just a tiny bit, but just still taking a beating. And same with Swap, down below 30%, 32% there. Zano as well. Haven still at 21% down. I don't know if this is any kind of like active suppression or whatever else. It's just the market doing this crazy thing, that head and shoulders that we saw throughout the week kind of being mirrored elsewhere. See it right there on Wrapped Bitcoin and Ren BTC. Very similar price action on a couple of the other projects like Ethereum Classic, Firo, Conflux, everything that's below the line there. One exception appears to be Wimblecoin, which is doing really well over the last hour and over the last, I guess 7 days. It's still up from above where it was at the beginning of the week. Still kind of an awkward thing there. I don't know what's going on with Wimblecoin. So many of these coins are so close to $600 that it's just painful, guys. If you had put $1,000 in before, you'd be down by a significant amount. If you had mined these coins and you had mined them at a greater than 50% cost subsidy because of your cost for power, then you're doing fine, right? This is where GPU mining makes a lot of sense. If you're mining these natively, then you're okay. You're not in the red yet. It's only if you put in that money directly, you're out of your own pocket, that you put it in directly, that you'd be kind of sweating right now. And if this market does have another leg up, which I suspect it does, again, not financial advice, but I suspect it does have another big leg up, then you're probably going to be fine holding on to these if you feel strongly about them. Just my 2 cents. You do with them what you see fit. Join into DeFi, do liquidity provision and whatever else, and grow your crypto holdings however you see fit. But I think if you are comfortable just holding it for a while as a miner, you're probably not going to do that bad. So jumping back into the portfolio, moving from GPUs into hard drive coins or capacity coins. MadeSafe coin is still at the top of the list, still over 80% up. The total P&L is still down almost by 4%, which is a bummer. And bottom of the stack is still Chia. Chia is still down by 51%. So we had a bit of sideways range there after the last video, but it's still way down. And no, I'm not going to name this video our Chia portfolio is 51% down. I got plenty of hate for that too, talking about the fact that Chia is 51% down since we put it in a portfolio. Like, I didn't make these numbers up, and I tracked it here in a portfolio so that fanboys and bag holders couldn't complain because I haven't manipulated the facts. This is just the market doing what the market does, and blockchain's keeping track of it. So if you want to get angry, I don't know, go like scream into a pillow or something. Eat a couple dozen like Snickers bars or something. Get your mojo back. But chill out, right? Like, seriously, these are just the numbers. But top of the list is still MadeSafe coin, still in the green. Burst coin is up significantly, but it's only barely over the $1,000 mark, so it's not really giving the total portfolio here of hard drive coins that big a boost. It's just kind of doing its own thing and holding its own. Filecoin storage and Sia coin all way down. Now, I had somebody mention in the comments section for the last video, thank you for making this comment. They said, hey, why do you have Sia coin here? And I mentioned, well, because they're a storage-related project. Now, if you guys want me to do a deeper dive onto Sia to kind of figure out like where they are, whether or not I endorse them, I guess I can. But I'm not trying to endorse any of the coins that are in these portfolios. Only illustrate what's possible if you're using GPUs, hard drives, CPUs, or ASICs. That's it. That's the whole point of the show. So I'll do deeper dives if you put me in contact with leadership. It's hard for me to carve out time for projects because I have so many other projects that are paying me for my time in order to do evaluations and proper proper deep dives. But if you want me to reach out to them or you want to reach out to them on my behalf, I'm happy to take a look at that. Just know I do this show for you guys, okay? And I do all the other shows for them, right? For projects that ask and that can actually help carve out my time. This is a labor of love. That is work. All right, so moving from hard drives over to CPU mineable coins. Whew, it's a hot one, guys. I got one remaining rig inside the house. I'm gonna have to get that out in the next couple of days. Oh man, CPUs are down 16.5%, a little bit higher. Monero is back up in the black, so that's good at over $1,000. Raptorium still pretty high, but not quite over the $1,000 mark yet. So almost treading water, not quite. Had a massive spike in profitability. I'd love to see what that chart looks like, so we'll open that up in just a second here. And Varus coin, big head and shoulders recently, but it's back down, following that greater trend right there. Just from a bird's eye view, we can see that. And wow, narrow, way down. Just like that trend is brutal right there. Sawtooth back up, right? A little sawtooth pattern, but definitely the general trend, and that channel is downward. I don't know what's going on there, wow, narrow team, but best of luck. Hopefully you are able to recover from it. Briefly, because we're talking about a little sidebar, looking at Raptorium, we're at 1/10 of a penny in terms of cost right now in USD, fiat, and 3 Satoshis, both down almost 3%, a little over or under 3% right there. Over the last 14 days, up, and trading volume, let's see if we can get that 7-day chart again, take a look at that spike. Yep, trading volume definitely does correspond to whatever that spike was, so it was some kind of a pump event where we had double the price that it is right now. Somebody got really, really happy with their trading on Raptorium. Don't know if it was wash. Looks like it probably was not. South Exchange has high trust scores there, and they have the majority of the volume. Safe Trade for the BTC pair has most of the remainder of the volume. The rest is kind of like Raptorium versus Dash on South Exchange. I don't know who trades against Dash, but it's mostly Raptorium versus BTC on both South Exchange and Safe Trade. Hey, Jeff, if you're watching this and you want to give us an update on the current state of Safe Trade, I'd love to have you back on the show and we can talk about it. Making moves there. Clearly, I keep seeing you associated with projects that whose development talent I respect the heck out of. So would love to chat with you about that. Safe Trade, guys, this is not sponsored, but I think I do have a referral link for them down in the comments or down in the description of this video. So if you want to check them out, you can. If you want me to interview the lead dev and project lead from SafeCoin/Safe Trade, I would be happy to do that too. So Jeff, if you're watching, let's set that up, man. Let's get you back on the channel. All right. I trust that what's happening on Safe Trade, that it's enough right here. The depth and volume, it's not a whole lot happening with Raptorium right now, right? This is really a spec mining play for those who are in the know. And I'm giving them a bit more press than maybe they can even handle by way of liquidity. If we showed them on what to mine, they wouldn't pass that 5 BTC daily mark. But here we are looking at them. Just very interesting to see that they're maybe being manipulated with by third parties. Hopefully not. Or it was just a massive sell-off by a couple people who had really heavy bags for mining early. So maybe they're just trying to exit and figure out what else to do with their time and their effort and their hardware. Yeah, bummer. CPUs down significantly. Looking at ASICs, we have got a similar story, almost 16% down in the total portfolio. Bitcoin is at the very top of the stack, but still not exactly a massive winner, I wouldn't say. We're at almost $900 from 1,000, so down. And very bottom of the stack is still Dash, but not as heavy a loss as some of the other portfolios, only 25%, which I mean, it's crazy to say, but in cryptocurrency, 25% dip in your portfolio or in a given coin is not the worst thing that can happen to you, right? For some people, they use it as a counter indicator saying like, all right, time to buy. I don't have to worry about selling on the way down. Now I can try to catch the falling knife, so to speak, and I can grow my bag and get ready for when it comes back up. Not advice. It's not what I'm saying to do with Dash, least of all. But these markets are weird, is all I'm saying. For it to only dip by 25%, not the worst thing to happen to somebody in crypto land. Just above that, Horizon, but it's a significant second place gap from the biggest winner to the biggest loser to the second biggest loser. Horizon at only 17.4%. Wow. But then plenty that are down in the double-digit losses right there from Decred all the way down to Horizon. So, guys, so much going on in the cryptosphere this last week. Bitcoin going up to 40K. The fear and greed index almost getting back up into the not extreme fear, but back into just regular old fear, into that range. Not quite into the greed side of the index yet. What an exciting week. Price is coming back down though. What do you think? Is there some kind of weird institutional suppression of the price across the cryptocurrency market? That's what I think. That's what my hunch is. Do you agree? What do you think could be causing this? Why is Bitcoin ranging sideways so much in the middle of what should be a significant bull run and continuing to move up? Yes, it's up 10x from what it was last year. But it seems like historically Bitcoin is typically had a little more gas than this, been able to go a little bit farther. So give me your opinions down below. Why is the whole market doing this crazy thing that it's doing? Regardless of that, guys, I think you're smart if you're mining on GPUs right now. I really do. FPGAs are fine. Some ASICs are fine, but GPUs, as you can see from the numbers, they've continued to go the distance, even the old stuff that's used. Right? So this is just validation of what I've been telling you for the better part of 4 to 5 years. Used GPUs work, right? They work. They come back into profit. And here we are making money with old GPUs that not even gamers want anymore. So pretty crazy times, guys. Thanks so much for being subscribed so you know when new videos come out. Be sure to hit the bell icon so you're notified of all new videos. Guys, you're the reason I make this media. I love your face. Remember to stay private and mind your biz.
Thank you so much for watching all the way to the end of the video. If you want to be notified of videos like this in the future, first off, click subscribe, press the bell icon. Additionally, you can sign up for the Mind Your Biz email newsletter. That'll give you exclusive access to certain freebies, notifications for deals within the cryptocurrency mining space, as well as some of our flash sales for merchandise, which you can buy with cryptocurrency. That's right. It's the only cryptocurrency merch that you can buy with cryptocurrency. We practice what we preach. As always, thank you so much for watching. You're the reason I make this media. I love your face, and I will see you in the next one.